Hello and welcome to Single Entry. Last class, we had done two sums regarding preparing of ledger accounts for debtors and creditors. And along with that, we had seen bills payable and bills receivables also. So that was a portion that we did last class. And today, again, we are doing a full-fledged single entry sum. So let's start with it. The sum reads as follows. A trader keeps his books of accounts under single entry system. On 31st March 2019, his statement of affairs stood as follows. Liabilities and the assets are given. So statement of affairs is given as on 2019. That means his opening statement of affairs is given. So creditors, bills payable, outstanding expenses and capital account is there. And on the asset side, you all can see we have furniture, stock, debtors, bills receivable, unexpired insurance, cash in hand, and at bank. So the opening statement of affairs is already given in the question. So you don't have to prepare this as a working note. I remember telling you in the second video that whatever case may be, you have to prepare opening balance sheet as a working note to find out the capital figure. But over here, the opening statement of affairs is already given to you. So obviously you will not be preparing any working note for this. Then the sum reads, the following was the summary of cash book for the year ended 31st March 2020. So you have the cash book given. You all can see there's opening cash in hand, cash sales, receipts from debtors, receipt for bills receivables, payment to creditors, payment for bills payable, sundry expenses, drawings, cash in hand. As you all can see, the cash book is given. So one aspect of transaction is already recorded. You simply need to post the other aspect. And again, video number 2, I had stated that for every item, you need to post it 2 times because you do not have a trial balance. But over here, the ledger is already there. The cash book is already there. So one aspect is already recorded. You simply need to record the other aspect. Then you have discount allowed to trade debtors and receipt. The figures are given. Bills endorsed is given. In video number 3, we spoke about bills endorsement also. Annual fire insurance premium of 6,000 was paid every year on 1st of August for the renewal of policy. Okay. Furniture, fixtures and fittings were subject to depreciation at 15% per annum on diminishing balance method. Fine, the depreciation method is given. And then you are also informed about the following balances. So you have the stock balance, debtors, bills receivable, bills payable, and outstanding expenses. These are the closing balances which has been given to you. The trader maintains steady gross profit of 10% on sales. Prepared trading and PL account for the year ended 31st March 2020. So you need to prepare trading PL and balance sheet. Fine. So that will form part of our main sum. What about the working? Let's see about our workings. Workings are because you have debtors and creditors, so you need to prepare that working. Along with that, you need to prepare bills payable, bills receivable, and we can see we have outstanding expenses as well as prepaid expenses. Outstanding expenses in the form of expenses, and then unexpired insurance becomes your prepaid expenses. So you need to prepare that account also. Any other account which we feel important, we shall do, we shall prepare as and when our sum proceed. So basically we are again opening 5 workings over here: debtor, creditor, uh, bills payable, bills receivable, and expenses account. Let's see any other item. If you feel important or necessary, we shall prepare in due course of time. Statement of affairs is not necessary as of now because it has already been prepared. Okay, so let's start with the sum. So we have let's keep on posting each and every item. As you all can see, I have already prepared trading PL and statement of affairs, the closing one. This is prepared, and I have prepared the workings: debtors, creditors, Okay. And we have over here bills receivable, bills payable, and expense account. So these accounts have been just opened. Okay. Now let's go one by one. So we have trade creditors. Trade creditors opening balance is here. Because the balance sheet is already there, so we simply need to post it once. So 5,80,000 will go to our opening creditor account. Opening creditor, we all know it is by balance BD. So let's put the figure over here, 5,80,000. So the opening figure of creditors is done. We need to post it once because balance sheet is there. Had there been transactions and the opening balances, we would have posted it twice. Bills payable, again the opening balance is there. So let's post it. One by one, we shall keep on posting it. So we have over here by balance BD, and we shall post the figure of 1,25,000. This is also done. 1,25,000. Outstanding expenses, opening is given. So let's go to expense account. We are doing it by balance BD. Outstanding, so it's a liability, right? So we are posting the figure as 45,000. So this is also done. Capital account, this is opening capital. So we are going to our balance sheet, closing balance sheet. So I'm writing over here capital and opening capital. The figure is given. In video number 2, we had found that figure. So 2,50,000. Writing in the inner column. So this is also done. Coming to furniture and fittings. This needs to be done because depreciation is there. We shall do this in due course of time. There we are not preparing any furniture fixtures account simply because there is no purchase or sale. So we are not opening that stock. 6,10,000 opening stock, or it will go to our trading account. So I'm writing it over here to opening stock. That is 6,10,000. Okay, this is done. The items not yet in yellow means we have to do that. Trade debtors, opening balance is given, going to our debtors account. So we have over here to balance BD. That is 1,48,000. This is done over here. Bills receivable 60,000, again an asset, going to balance BD. To balance BD 60,000. This is also done. This is done. Unexpired insurance is expense, that is prepaid expense. So we're going to expense account. Expense account, I'm writing over here to balance BD. Yes, you can have both opening balances as BD on the debit and the credit, a liability and an asset. So we are writing this 2,000 over here. This is also done. Then we have cash in hand, cash at bank. Look over here. 80,000 is over here, and in the cash book, 80,000 is over here. Double entry is done over here. In video number 1, I had stated that for few entries there is no entry, for few there is single entry, and for others there is double entry. So for cash in hand and at bank closing balance, that entry has already been done. So we don't have to do anything regarding 80,000. This is done already. If this is done, this is also done. Double entry. Cash sales. Cash sales, we need to place it in our trading account. So we will write over here by sales cash plus credit. Correct. So we will put the entire figure over here. or rather let me do it like this to make it simpler: by sales, cash and credit. So cash sales, I am writing it over here. Cash sales 73,80,000. So it has come on the trading account. Received from trade debtors, the entry is bank account debit, or as you can see, the bank account is debited to debtors. So we are going to the debtors account and we are writing over here by bank, and the amount has been realized. If you remember in the video number 2, there were simply transactions and we were posting it 2 times, but over here we're posting it only once because the cash book is given. So be very careful with these things. 1510 is done. Receive for bills receivable. Again, bank account debit to bills receivable. So we are going down to the bills receivable by bank. So we are crediting our BR account 3,40,000. Done. So this transaction is also done. Okay. Payment to trade creditors. Creditors account debit to bank. So creditors account debit to bank, we have made the payment and the payment is of the value 75,07,000. Fine. Simply posting it. Payment for bills payable, again bills payable account debit to bank. So bills payable account debit to bank. So the amount over here is 8,15,000 rupees. This is also done over here. This is also done. Then we have sundry expense paid. The entry over here would be expense account debit to bank. So we're going down to expense account debit to bank. So expense account debit to bank. So we are paying how much? We have paid 6,20,700. Fine. This is also done. Now drawings. Entry is drawings account debit to bank. Going to our balance sheet. Add, we have profit will come later on, less drawings. Inner column we are writing the drawings figure, that is 2,40,000. 2,40,000. Okay, so this is also done. Then we have cash in hand and at bank the closing balance is given and the closing balance goes to our balance sheet. So I'm writing it over here, bank. In the outside column, the bank figure is given 127,300. So till now, opening balance sheet we have posted once and cash book we have posted once because one aspect is already done. Discount allowed to trade debtors and receipts from trade creditors amounted to 36,000 and 28,000. So discount allowed. These are not entries, right? We have to post it 2 times because no ledger has been prepared for the same. So remember, such transactions required to be done 2 times. Discount allowed. First of all, debtors account by discount allowed. Discount allowed is how much? Let us see. 36,000. Discount allowed is 36,000. And the second aspect of discount allowed will go to our PL account. PL account, over here I am writing to discount allowed expense 36,000. 36,000 discount allowed. Yeah. So discount allowed is done 2 times. And then discount received is 28,000. Discount received, it's an income. So I am writing it over here by discount received. And creditors account, it is to discount received. Discount received is 28,000. Yes, 28,000 and transferring this income to our PL. So by discount received 28,000. So for few items we are posting it twice, for few items we are posting it only once. Bills endorsed amounted to 15,000. Bills endorsed in the previous video number 3, we discussed about bills endorsement. Bills endorsement, we are endorsing it to whom? We are endorsing it to our creditors. So creditors account debit to bills receivable. Already explained in the previous video. Creditors account debit to bills receivables. How much is the value of bills endorsement? Bills endorsement is 15,000 rupee. So 15,000 rupee is the figure. This is the bills endorsed, and in the bills receivable it will come as by creditors. 15,000 rupees. Fine, this is also done. And annual fire premium 6,000 was paid every year for the renewal of the policy. Okay, so annual premium is paid of 6,000 rupees every year on 1st of August. Correct? So what is happening over here is that how many months it's prepaid? How many months is being prepaid? Our books are being closed on 31st July, 31st of March, and prepaid is April, May, June, July. So 4 months it's prepaid. So if 4 months it's prepaid, 4 months prepaid, then you are paying how much? 6,000 for the entire year. So the amount of prepaid would be 6,000 rupees divided by 12 months into 4 months. So 2,000 is the prepaid amount. How did we find out? We found out by 6,000 by 12 into 4 months. This is the way we found out the prepaid amount. We are paying on 1st August every year for 12 months, and our year is ending on 31st of March. So we are paying extra for April, May, June, July. For 4 months, we are paying extra. So 2,000 rupees is the prepaid amount. So this 2,000 prepaid will go at two places. Because it is the prepaid amount, let's go to expense and write over here by balance CD. Asset is what? Closing balance will come as by balance CD, 2,000 rupee. 2,000 rupees closing balance asset, because we have prepaid it. Opening prepaid came as to balance BD, so closing prepaid will come as by balance CD. And because this is closing prepaid will go where? To our closing balance sheet. Closing prepaid will go to our closing balance sheet. Be very careful by the kind of wording that I'm using. So closing prepaid going to closing balance sheet over here. We have prepaid expense. Prepaid expense, insurance, whatever you want to write, 2,000 rupees. So be very careful by the way you do it. Furniture fixtures were subject to 15% depreciation. 15% depreciation, we have it as 1 lakh. So depreciation, let's write it in our PL account. So to depreciation, it's very simple. It's 1 lakh rupee into 15%. 15,000 rupees is the depreciation. Let's post this also in our closing balance sheet. Okay, so we have over here fixed assets, writing in the inner column as rupees 1 lakh, and then we are doing less depreciation. Less depreciation is coming as 15,000, and in the outer column we are writing 1 lakh minus 15,000, that is 85,000. So 1 lakh wasn't done. I am now making it yellow because signifying this is also done. Okay, so the notes that were given, that is done. Now the closing balances. Stock closing balance is given 6,50,000. So you all know closing stock goes where? In the trading account by closing stock. By closing stock, it's 6,50,000. Remember, these are not ledger accounts. So balances are given. Balances need to be posted 2 times. Balance sheet was given 1 time. Then we have cash book given for 1 time. But over here, we have only been giving the balances. So we need to post it 2 times. So closing stock 6,50,000 in the trading account. Also, it will go where? Our statement of affairs. So I'm writing it over here. Stock closing balance sheet. That is 6,50,000. 6,50,000. Okay, this has been posted twice now. Trade debtors. Trade debtors, we have to again post it twice. So one will come to our closing balance sheet. Closing balance is given. So we have debtors over here. Debtors is given as 1,52,000 and it will go to our closing debtors by balance CD. By balance CD. Okay, so 1,52,000. This has also been posted. So now we have bills receivables. Again, two sides, closing balance is given. So closing balance sheet, we have bills receivables. The amount is 75,000 and it will go to my closing balance of bills receivable by balance CD. Okay. So the balance over here is 75,000. This is also done. Bills payable again. So closing balance is given. So we will write in the closing balance sheet as bills payable. In the outside column, I'm writing it as 1,40,000 and closing bills payable account. Closing bills payable account will be to balance CD. So we are simply posting it two times. And we have done this already in the previous two videos. Okay, outstanding expense. So in the closing balance sheet, closing expenses is given. Outstanding expenses. So we have the figure as 5,000 and also this will go to our expense account. Writing it over here. Sorry, to balance CD. Outstanding expense closing. So we have it as 5,000. Fine. This is also done. So 5,000 is done. Now gross profit percentage is 10% on sales. So we, as of now, we only have our cash sales. We need to find out credit sales. So first of all, which account should be balanced? We should balance debtor account or credit or bills receivable. Already discussed in the video number 3 that we have to first balance our bills receivable because that is a subsidiary ledger. So let's first find the balance. The balance of bills receivable. It will come on the debit side to debtors balancing figure. To debtors balancing figure. So 4,30,000 minus 60,000. 3,70,000. 3,70,000 is the bills that has been given to the debtors during the year. Okay. So we are posting the figure to our debtor account. 3,70,000 over here by bills receivables. That is the reason the video number 3 was done, so that you understand the concept. 3,70,000 is posted. So now we will have two sales balancing figure. Rather, we should write over here to credit sales. Okay, so let's find out the balance of our credit sales. So the credit sale is coming to 19,20,000. 19,20,000. Now moving up, writing it over here, credit sales. Credit sales is over here 19,20,000. Correct? This is done. Now let's post other figures. Let's now close our workings. and then we shall move towards our main sum. So creditors account, before that we will balance our bills payable account. Bills payable account, we shall balance it first, and the balance will come as, should come on the debit side. Just first, let's write the sum. Okay, so it is coming as by creditors. That is our balancing figure. These many creditors were issued bills payable. This minus this, 8,30,000. So this is going to our creditors account as two bills payable. Two bills payable as 8,30,000. And now we shall find it out over here by purchase. By purchase. Rather, purchase we will get as our, we don't have purchase, we don't have closing balance also. We do not have purchase, we do not have closing balance also. So this is a tricky situation now. So what do we need to do first? What do we need to do first? First of all, because purchase figure is not given, we will come to our trading PL. We know 10% GP is there. So I'm writing it over here to gross profit, 10% on sales. Total sales is how much? Total sales is 73 lakh 80,000 plus 19 lakh 20,000, and on that 10% is your GP. So your GP is coming to 9 lakh 30,000. Your GP is coming to 9 lakh 30,000. Correct? If your GP is 9 lakh 30,000, so how much will be your purchase? So we are writing it over here to purchase. That will be our balancing figure. So let's find out how much is our purchase. Okay, so our purchase is coming as 84 lakh 10,000. Our purchase is coming as 84 lakh 10,000, and this purchase we are assuming it to be completely credit purchase for the simple reason no cash purchase is given in the question. So we are coming down to the creditor account and writing it over here by purchase, and the figure we have already found out from the trading account, 84 lakh 10,000. So now we can get our closing balance. To balance CD, sum by sum you have to understand which balance will come out how. So that is a tricky situation, but that comes with practice. So our closing balance will come as 6 lakh 10,000. Our closing balance will come as 6 lakh 10,000. Okay, so I'm making this in yellow again, signifying this is the balancing figure that has come, 6 lakh 10,000. Okay, this closing balance will go to our closing balance sheet. So writing it over here, creditors. Do not forget to post your figures. 6 lakh 10,000. Fine. This is also done. Okay. So our debtors is closed, creditors account is closed, BP is closed, expense needs to be closed. Now expense, let's see. Let's add it up first. Remember, we follow accrual system of accounting. We follow accrual system of accounting. So only that balance which has its expense related to current year will go. So we're writing it over here by PL. That is our balancing figure. This amount will go to our PL, signifying that this amount has been paid during the year. 5,80,700 is the expense that relates to current year. See, you paid 6,27,700. This amount you paid during the year, but For the current year, the actual expense is coming to 5,80,700. So this amount will go to our PL account. But how can it be different like this? It can be different because you had outstanding was for the last year. You paid this year. You had prepaid. That relates to current year, but you paid last year. So because of these things, your expense account you had to prepare. You can also prepare in a statement form, not preparing a ledger account. So 5,80,700. We are writing it over here to expenses. To expenses, it's coming to 5,80,700. Fine. So all our workings are closed. GP, let's write it over here by gross profit. Gross profit is 9,30,000, and now we can find our net profit. Now we can find out our net profit. So we have two net profit. So let's find out how much is our profit. You can also encounter loss, so you need to calculate it first. So the profit is coming to 3,26,300. 3,26,300. Adding over here profit already done. So profit we are writing it as 3,26,300. Now we are going to close our balance sheet. So capital will be opening capital plus profit minus your drawings. 3,36,300 is our closing capital. So now let's close our balance sheet. It should tally. Okay, it's tallying. It's tallying. And what you can do is, if you're unsure about the balance sheet item, what you can do is you can count the number of items. See, on the asset side, basically there's the problem. Asset side we have 1, 2, 3, 4, 5, 6 items. So go to your statement of affairs. Opening 1, 2, 3, 4, 5, 6. You have 6 items. So this way you can give surety to yourself that you have posted all the items. So, and on the liability side, you have 1, 2, 3, 4 items. And over here we have capital 1, 2, 3, 4. We have again 4 items. So this way you can get your balance sheet opening and closing one rectified. Well, this was the sum for today. In next video again, we shall carry forward with single entry system. Thank you everyone.